Have you ever wondered about the current state of the real estate market? Perhaps you're mulling over the idea of buying a property, or maybe you're a seasoned investor looking for the next big opportunity. The real estate market is a complex beast, constantly evolving and shifting under the influences of various economic and societal factors. Understanding its current state can be a massive advantage. So, what's happening in the market right now? Stay tuned as we dive deep into the current market conditions. To start, let's understand the current market conditions. The real estate market is a vast and dynamic entity, teeming with a multitude of variables that influence its behavior. It's a world of its own, with various sectors such as residential, commercial, and industrial, each with its unique trends and price points. Diving into the residential sector, we're seeing a period of growth. Property prices are on the rise, driven by a combination of low mortgage interest rates and a surge in demand. Many people are seeking to secure a home in the wake of the pandemic, a trend that has been fueled by the shift towards remote working and the desire for more spacious living environments. On the other hand, the commercial sector tells a different story. The shift to remote work and the rise of e-commerce have had a significant impact. Traditional office spaces and retail outlets are experiencing a dip in demand, leading to a stagnation of property prices in this sector. However, this isn't necessarily bad news for investors. The market is ripe for opportunities to acquire commercial properties at lower prices, with the potential for future growth as the market recovers. As for the industrial sector, it's seeing a boom. The rise of e-commerce and changes in supply chain dynamics have increased the demand for warehouses and distribution centers. Property prices in this sector are climbing, presenting a promising investment opportunity. The real estate market is also influenced by a variety of macroeconomic factors. These include inflation rates, employment levels, and government policies, all of which impact property prices and investment opportunities. In a nutshell, the current market conditions are a mixed bag. There's growth in some sectors and stagnation in others, but opportunities abound for savvy investors. Understanding these trends is key to making informed decisions and capitalizing on the potential of the real estate market. Now that we've taken a look at the current market conditions, let's move on to the next point. Did you know that various economic factors significantly influence the real estate market? Let's dive a little deeper. Interest rates are a vital cog in the real estate machine. When rates are low, borrowing becomes more affordable, and this opens up opportunities for potential buyers. On the flip side, higher interest rates can deter buyers, leading to a slowdown in the market. So, if you're keeping an eye on the property market, make sure you're also watching those interest rates. But it's not just about interest rates. Employment data also plays a significant part. When employment rates are high and wages are on the rise, consumer confidence usually follows. This confidence often translates into increased spending, including on big-ticket items like property. However, a sluggish job market can have the opposite effect, with fewer people willing to commit to a mortgage. Now let's talk about gross domestic product, or GDP. GDP is the total value of goods and services produced by a country in a given period. It's like a snapshot of a country's economic health. When GDP is growing, the economy is in good shape, and real estate often thrives. But when GDP contracts, the economy is struggling, and the property market can cool off. These factors don't operate in isolation, though. They're interconnected, each influencing the others in subtle and sometimes not so subtle ways. For instance, when the economy is booming and employment is high, interest rates might rise to keep inflation in check. This could then put a brake on the real estate market. So, as you can see, the property market is a bit like a jigsaw puzzle, with economic factors as the pieces. Each piece affects the others, and together they create the overall picture. Understanding these factors and their interplay can help you make informed decisions whether you're looking to buy, sell, or invest in real estate. These economic factors play a crucial role in shaping the real estate market. Let's move on to our next point. Let's talk about the future. What can we expect from the real estate market in the coming years? The real estate market is ever-changing, constantly shaped by a variety of factors. Predicting the future is no easy task, but we can make educated guesses based on current trends and historical data. So, let's peer into our crystal ball. First, let's look at market trends. With urbanization on the rise, we can anticipate a continued demand for properties in city centers. However, the desire for space and tranquility might also lead to a surge in the popularity of suburban and rural properties. Next, let's talk about investment opportunities. The rise of remote work has sparked interest in home offices, making properties with such features increasingly attractive. Additionally, sustainable and eco-friendly properties are gaining momentum, appealing to the environmentally conscious buyer and investor. But what about potential challenges? Well, fluctuations in economic conditions and interest rates can significantly impact property prices and demand. Additionally, climate change is becoming a growing concern, with properties in areas prone to natural disasters possibly facing devaluation. Despite these potential challenges, it's important to remember that real estate often proves to be a resilient sector, bouncing back even after tough times. With careful planning, well-informed decisions, and a dash of patience, real estate can be a rewarding investment. The future of the real estate market seems promising. However, it is always wise to stay informed and make educated decisions. Let's quickly recap the main points we've discussed today. We started by painting a picture of the current real estate market conditions. It's a dynamic ecosystem, constantly swaying under the influence of several factors, from interest rates and lending laws to local job growth and population trends. We then delved into the impact of broader economic factors. The real estate market doesn't exist in a vacuum, after all. It's interlinked with the economy at large, and events like recessions, financial policies, and technological advancements can all shape its course. Lastly, we ventured into the realm of future predictions. While nobody can predict with absolute certainty, understanding the patterns, trends, and indicators can help us make educated guesses about where the market might be heading. And that's a wrap. To stay updated with the latest trends and gain a deeper understanding of the real estate world, join us on this journey. Thank you for watching. If you found this video helpful, don't forget to like, share, and subscribe for more insightful content.